Hello, everybody. I'm your boss, Joe Boss, and welcome to another daily plan. This is gonna be a pretty chill stream today, so anyone who's in the chat, really, I'm gonna kind of put you guys in the driver's seat after I kind of go over the major assets here. Bitcoin's doing well, the dollar's down, gold is up, Eurodollar's up. The S&P, it's up on the day, just over the last hour, it's down a bit. Magnificent 10, which is the top 10 weighted equities in the S&P. Yeah, they got a nice little positive drift here, but they're doing pretty all right. How about China? I'm pretty sure I have China somewhere around here. Maybe that's on another index. How about Nikkei? Oh, wow. Japan 225, not holding up so well. But there's the Nikkei future. Oh, no, that's the NASDAQ future. So NASDAQ did well yesterday. It's pulled back a bit more significantly today, but overall, this is a positive drift. Let's check out Pound. Pound holding strong, not dumping here. Good to see. I didn't put a timestamp on this one here because this is just, hey, there's risk of going up here. I'm not so sure. Maybe I should timestamp this for yesterday when I drew it in yesterday's stream. Which was 12, I believe, right? Yeah. So I'll timestamp that just in case. We don't want to forget our timestamps on our expectations. Looks like New Zealand dollar, this probably ain't gonna hit. In fact, James, you want me to pull up, I believe it was Aussie, New Zealand, right? Let's go ahead and pull that one up. It is, wow, those yield spreads. Those yield spreads are looking pretty darn good right now. Yeah, it's holding up. Let's check this out on the high odds and see where this thing could go. Well, somewhere in here looks like the first stop, and then somewhere up here looks like the next stop. So up here would be maybe, well, conservatively, it's like another under 100 pips from here, or call it 150-ish pips from there. Yeah, this spot does seem more likely based off the ranges. So maybe the top end here, maybe 108. Looks like the next most likely spot on the month. Let's check it out for the week. Well, that looks like the likely high for the week. But as you get more risk on, it's gonna be hard to argue that we can't trade up here, considering this bullish momentum and positive drift. Just most of the time, seasonally, the top for a given, for this particular week, seasonally, over the last 19 years we have sampled, the top comes in around here, around this probability weighted pivot. Let's check out our high odds. Yeah, there's risk of going up here continuously with non-seasonal data, right? And you can see that's over here kind of in the lower probability space on the seasonal data. Closes, yeah, there's some risk of positive closing drift. Most of the time it comes back down, but considering you got the positive yield spreads here, I wouldn't set too great of expectations on that. So I'll go ahead and set this as my expectation into the end of the week on this cross pair for Aussie New Zealand. Pound yen, James. All right, I can pull that one up. Wow. Looks like the high is probably going to be in now, in my opinion. I mean, understand that tomorrow we get the BOJ blackout, so no one from the BOJ is going to make any sort of media comments, at least officially, until the BOJ actually comes out and does their monetary policy movement next week. If I can recall, yeah, here we go. I posted this in the Discord. Oh, hold on. What I want is to copy this image, not copy this link here. Copy image. So let's read this real quick. When it comes down to JPY pairs, Japan is about to see whether wage hikes will be strong enough to prompt the central bank to conduct its first interest rate hike since 2007, as early as next week. Yeah, a move that would influence prices on everything from financial assets to mortgage to daily necessities. So if we go ahead and look at this highlighted spot here, a wide range of unions are poised to release the results from negotiations with the Japanese Association of Metal, Machinery, and Manufacturing Workers, saying Wednesday that 60 affiliated unions secured an average pay increase of 5.32%, exceeding last year's tally by a large margin. Toyota, an industry bellwether, said it agreed to pay unions' demands in full. An earlier report that effect boosted the yen and weighed on Japanese stocks. Rengo, the nation's biggest union federation, will give its first tally of annual wage deals reached by employers and labor representatives on Friday post. So tomorrow we have the BOJ blackout, and then on the following day, we have possibly some end-of-week volatility of yen strength if they come out and confirm these higher wage numbers kind of across the board. So let's go ahead and look at our closing odds. Yeah, probably something like that. Let's just keep it simple. It's probably going to be bullish going into, well, bullish yen. That would be bearish, all these yen pairs here going into the end of the week here. So let's go ahead and draft up our expectations with the information we currently have available to us, and then we can change our expectations as time goes forward, whether or not those wage prices actually reached or exceeded expectations here. So let's go for our nominal expectation based off the closing range probabilities data. And yeah, pound might see a bit more movement because, I mean, what? It's going to move like this maybe, or down to here. Let's see here. What else is there? What else is there to look at? Let me look at the chat. I've been playing the market on Arbitrum 2 or L2 chains. Let's go ahead and actually check that out. USDT. Pull it up on Binance. Well, it's moved so far so good. Looks like we have decent data here, so we can pull up ranges. Well, not so much. Yeah, usually when you get this, when you have very big bins up here and very tiny bins here, usually that means it needs more data. Yeah, this thing needs a lot more data. Yeah, you can see the history on this asset is not so much. So let's try slightly lower time frames. Yeah, you can see the low distribution isn't necessarily fitting all too well because of, well, we kind of need more data here. Let's go ahead and pull this up on a daily range maybe. Yeah, you know, when you move so much in a single day, it's kind of hard to model things because nominally you're getting your tops in like this and your bottoms in like this. So we just need more data to come through before we can, I don't know, be more aggressive with this particular indicator. More data, the more accurate the distributions will be, because the distributions will change over time as more data gets added to the chart. Oh, and check this out. For the day on the DXY, that was the low for the day. If I could go ahead and highlight that, right? That was the low for the day, and that was a peak for where you're likely to find your bearish lows on the day for the DXY. Nice, nice, nice. Actually, let's go ahead and use the replay mode real quick. See how yesterday performed on this. Oh yeah, check that out. Most of your highs come in around here. There you go, and a lot of your lows come in around there. And yeah, so if you had dollar bullish expectations, that makes sense buying there. But you probably did not have that much time to actually execute on that trade. Let's go down to like a 15-minute. See how long it was down. Yeah, it was down there for like I don't know, maybe not even a minute. So maybe most of the trades were around here, and the stops were maybe somewhere around here, around 102.65, I'd say, would have been nominal. Yeah, something along these lines intraday. Yeah, see you go, there's 6.5, 102.65. So it's better than a 1-to-1. And when you're doing intraday trades, yeah, there's going to be risk. It's just a matter of picking the right expectation on the directional move there. Okay, let's go ahead and undo these things here. So then we're kind of back to where we currently are at. Call this a 4-hour. Delete these little things. But yeah, nominally, everything is fine. Everything's still risk on, as I've ranted about in the last couple of streams. And I mean, we can bring up oil now. CL. Oh no, that's Citigroup. CL. If I could, real quick, catch another screenshot of this. Trading economics. What we want to pull up is the EIA number. Let's screenshot all of these. So here's the EIA numbers that came out. And let me scrunch this a little bit. So what we're looking at is which of these numbers here are green or red. So distillate stocks, which is just another word for inventory. And then this is the change in inventory. So you can see heating stocks looks like they decreased, which pretty much is nat gas. Crude stocks, refinery crude increased. Gasoline production increased. Gasoline stocks decreased. So inventory of gasoline decreased. Inventory of oil increased. Inventory of crude oil increased. Russian crude increased. Distillate fuel increased slightly, right? So net across the board, when you take all that into account, it's good for the energy industry. Nothing too major as far as changes. What's that? Gala USD. How about ETH though? Yeah, I can bring up ETH. Let's go down here. Yeah, ETH is just behaving nominally. It's not doing anything. It's not doing anything super crazy quite yet. I think we need to be careful about closes up here though, right? Going into the end of the month. So like another $500, $800 range, which would imply that you get your high somewhere above there, which would be like that spot. I don't think we're going to be doing terribly crazy moves into the end of the week, but I could just be eating my words there. Because, I mean, maybe past 4,200, it starts to become a guess of where the top for the week is going to come in. And so far, this has been nothing but positive, bullish drift here. So, again, I'm not bearish crypto at all right now. I'm not bearish crypto at all. Litecoin had its pop. It's probably going to continue moving higher if everything else continues moving higher. Monero's holding in there. Bitcoin drifting, nice. drifting, nice. It'll probably keep going higher and outperform the rest of these. Let's see. There you go. For Brenda, that's your ETH. What's that? Gala USDT? Man, that thing had a nice little pop. But pull back so far. Yeah, this is another coin that probably doesn't have a whole lot of historical data. Yeah, it has about 2, call it almost 3-ish years now. But when you get these sort of things, it's, you know, this indicator is probably not going to be a good model for your crazy parabolic moves. Remember, these are nominal, right? So if you look over the entire history, where's the most likely high and where's the most likely low? So if you're expecting super high parabolic moves, unlike any regime we've had before in the history of the chart, then it's going to be hard to model those things, which is why you generally want to try and stick to, you know, modeling stuff that has more data. But then again, the more you learn about the world, the better at trading expectations you can get. And then you can interpret these distributions to say, well, this thing has a nice positive drift on it. It has potential moves to move, potential room to move parabolically. I would just start getting careful around certain price thresholds on the risk of parabolic moves. That's the general approach that I have with this thing to crypto. The nominal asset classes, you know, the traditional ones generally respect these distributions a bit more closely. Yeah, any higher here on oil, we're probably gonna be guessing where we're gonna be topping out for the week. Let's go ahead and actually bring up our seasonal data here. Yeah, any higher, we're probably gonna be moving up here on oil into end of week. That actually could be a risk for oil bears. A lot of forecasts for oil to reach the $80 handle, trade around 85, 90, frankly. OPEC production cuts, Russia production cuts. Those definitely can continue moving things. It's just a matter of how big those cuts are and when those cuts come in. And then what's the landscape for the dollar and other risk-on assets? Does this bullish move actually continue? Again, I'm on the team of, yeah, dollar's going to get weaker. All these risk-on assets are going to keep going because until bad data actually prints bad, just having uncertainty about future economic events doesn't imply that just because there's uncertainty that you should be bearish. It means you should be uncertain about the bullish or the bearish outcome. And in those cases, I'll go ahead and lean towards how things have been changing recently and kind of go with a momentum play, which is, hey, things are improving. And if you have uncertainty about what's going to happen next, it's probably safest to assume things are going to continue improving, right? So I'm going to go with that. I mean, outside of this and NQ, actually, let's go ahead and bring up that ES real quick. Looks like we're hitting our expectation on our high here, our nominal expectation. So nothing super crazy this week. Looks like we're not going to be getting this move here. I mean, even if Bitcoin rallies super, super hard, I think MSTR, MicroStrategy is doing exceptionally well. There was actually a really good thread on someone who's been doing analysis on MSTR in the crypto chat that I posted. Let's see here if I can find Oh, actually, no, it's in the equities channel. Let's see here. From a guy named Before You're Bored. Before You're Bored. Yeah, and this guy was really, really, really early on to trading MSTR. I'll go ahead and screenshot this tweet real quick and bring it up here. Like, this is just 1 out of 12 tweets the guy did for his MSTR analysis. And essentially, he's saying MSTR is kind of like a leveraged Bitcoin trade at the moment. And you can kind of see what he means by that. And in all seriousness, I go ahead and I read the analysis, and frankly, I agree. It's like, go ahead and guess where this thing's going to top out. Saylor just keeps buying and buying more Bitcoin and keeps taking loans to buy and buy more Bitcoin. And as more and more people want to buy Bitcoin, MSTR becomes one of those tickers you put in the little sub-portfolio of Bitcoin exposure. At least that's what a lot of people do. Let's see here. I don't know if there's anything else I really need or want to cover. This might end up being a particularly short stream here because everything is nominal. Everything is still moving risk on. No major news probably up until later Thursday, early Friday. And even then, the news looks optimistic still for more risk on. So I'm hopeful for the end of this week, and the real risks are going to, frankly, I think, come around FOMC. If the Fed is, like, let's say they do one, they only expect one cut, but I don't think that's going to be the case. Frankly, I think now that I've been doing a little bit more analysis on Fed stuff, I think more than 2 cuts this year are still likely. So even though the Fed and some people are getting more conservative about the Fed rate cuts, one in June and maybe one in September before the election, there's a real risk that the Fed undercuts, and at that point actually creates some dollar strength into the second half and creates a pretty choppy market where you end up having to go risk off for a decent portion of the second half of this year. And it slows down the economy just a tad. It makes the relative strength of the United States with its higher rates outperform the rest of the world, as they also look to potentially cut more than the Fed. And I don't think the Fed wants to actually put the rest of the world in that scenario where they have to start making decisions about, are they going to be moving ahead of the Fed or not? So I have a feeling that the Fed's probably going to, over the summer, start putting out some maybe more dovish commentary on, hey, we're making more progress on inflation and on wages and on unemployment. So let's go ahead and be a little bit more dovish. That'll be my expectation, my hopeful, optimistic expectation, is that we get more cuts than 2. Because 2 cuts, I don't think, is going to be enough. Otherwise, compared to the things that I've read so far, there's actually more risk to the Fed staying too tight than too loose. So if they did 3 or 4 cuts, that'd be fine. If they only did 2 cuts, it might induce some risk off sort of movement. It'll probably create a bit more volatility in the FX space, because at that point, some central banks are going to be cutting more than the Fed potentially. We'll see. I mean, not necessarily maybe for Australia and New Zealand, because they're expected to start cutting like way out in September. So it's really going to be a balancing act, updating our expectations in, frankly, several months from now to see how that's working out. But it's important to keep these sort of long range expectations in mind because they do impact the short term movements. They do impact how, hey, we're only expecting 2 cuts this year, and so far things are moving as expected and are moving nice and risk on. You want to always try and keep the how things could potentially change on the horizon, because let's say the Fed doesn't start becoming more dovish towards the summer, well, that's probably gonna lend some strength to the dollar and put in a top at least on a lot of equities. And it could impact the rest of the world if the rest of the world is giving more dovish outlooks, right? So I don't know, there's currently, in my view, risk of the Fed not cutting as much as they would need to help at least the US side of things. And, this is where having a globally diversified portfolio can be particularly helpful to diversify your risk away from the US and central banks. I think Bitcoin will still probably do really well this year, net. Man, this October, November, December is probably the fourth quarter moves for crypto are pretty nutty, right? They can be pretty damn nutty. But I wouldn't be surprised to see some pullback this year and then some retracement of that huge pullback by the time we get into sometime during like the fourth quarter. It's just, you don't know where we're going to be at that point. Like, let's say during the end of the second, beginning of the third quarter for crypto, or frankly on a lot of these assets, or what the tone and expectations of these central banks are going to be. Because guess what? New geopolitical things can come into frame, and new wars can start. New wars can, current wars can end. All sorts of things can change and intensify or de-escalate. It's just, there's all these risks that you do have to keep in mind that can change your future expectations on the long term and the short term. And that's quite frankly why I practice and preach. The more you learn about the world, the better you can get at trading, the better you can get at figuring out the change in expectations. I think with that all said, it was a nice, pretty chill day. I mean, hell, even silver got a nice pop up. It's now above $25. Yeah, good stuff on that. Actually, let's check out gas, and gas got a nice pop up. It's doing fairly well. Yeah. All's well today. Everything is nominal, only minor news. Towards the end of the week, we should probably get some more volatility on a few assets. But really, at least in the currency space, I'm watching those flash European PMIs that are due next Thursday, because the flash PMIs are kind of a big deal for the currency, based on my experience. Those turn out well, then I'll look like a genius holding on to these two trades. If we continue seeing positive drift, if we're able to get through FOMC without too much hawkishness, because that could throw these trades off real quick. Yeah. We'll see. Again, even if the Fed says we are only going to expect 2 cuts, the market could come in with expectations of what I'm saying now to essentially call for, hey, we think the Fed is not pricing enough rate cuts. We think they're going to still do more than 2. So even if the Fed dot plots say 2, it actually would be a huge risk on surprise during the FOMC meeting if those dot plots were kind of split between 2 and 3. You know, let's say half of the participants think 2, half of the participants think 3, some of the participants think 4. That actually would update the market's expectations to start being more curious about, well, if things improve more materially from here to the end of summer, we could probably expect more cuts than the median expected number of cuts, which is 2. So there's, I think, under that rationale, upside risk to FOMC. I don't know. We're just gonna have to wait and see if I'm right on that expectation or not. So we'll find out. In the meantime, I'm gonna say thank you guys for watching. Thanks, James and Brenda, for hopping into the chat. And I'll see you guys for tomorrow's stream. Today's stream is a bit delayed. I had some errands to run. And I'll see you guys in a bit.